Good evening, Doc Severson here with a TheoTrade report for Thursday, April 26th. All right, the closing bell just rang, and the big story here is, of course, Amazon. Amazon just announced earnings, and they went from about 15.20 up to about 16.41, so 120-point gap higher so far on earnings. So we'll see how that translates to tomorrow morning, right? So markets have to digest this, and there's always going to be people reading between the lines, and maybe they don't see exactly what they thought they saw the first time around. So by the time we roll around tomorrow morning, it could be completely different. But this is kind of hard to fade something like this, 120 points to the upside. Some of the other stocks reporting earnings tonight. Here is Microsoft. Microsoft initially bad reaction, trying to recover from that right now. Not down a whole lot, not much of a big reaction to that so far. And then next we'll look at Intel. Intel apparently has got some good news to report. So this is up from 53 and change up to about 56. So again, pretty strong move here on Intel, but nothing compares to Amazon right now, and anybody doubting Amazon's ability to execute is just getting steamrolled to the upside. Now, if we look at the expected move that Amazon has into tomorrow's expiration, it was only 75 points. So this was plus minus 75 points into today's close. That is being blown away. So anybody thinking that a simple iron condor to be able to handle all that theta into tomorrow, this is going to be dicey to see if you can still win with a plus minus 75 point expected move. Again, we can fade between now and tomorrow, but right now this is pretty strong. So you're going to have this thing close below 1595 to have any shot of winning that iron condor. Okay, so how does this relate to the overall markets? Here's the S&P 500. And even though we've seen some days of selling here, so we've seen 1, 2, 3, 4 hard days to the downside off of the highs, we've also seen yesterday's pretty close to a hammer, and today a lot of accumulation, even though this is another lower high in a larger time frame. So if I go out to the chart that I've been watching lately, which kind of shows everything going on here. So we had this price wedging into this ascending triangle, breaking out above that on low volume, doing an overthrow, and now we're seeing a series of lower highs and lower lows. What's most important to me is not necessarily this trend line, but this overall price level. So right now, until we can get above and beyond, and when I say we, that's the S&P 500, above and beyond that 2680 to 2682 level, then this is just another lower high. But we do have a reversal here on the 4-hour chart. The 4-hour chart's starting to make higher highs and higher lows. Reversals start from the inside out. However, as we look over at the S&P 500, again, we are absolutely trendless right now because we have lower highs, higher lows, lower highs, higher lows. So all of this is just vectoring in to the apex of what is building to be an epic triangle. Now, why is this happening? Because this is a very normal reaction from this parabolic move that we saw in 2017 as we went completely vertical here into exhaustion, and the market's doing exactly what it needs to do to be able to digest that move. And it's pretty close to getting there as well, too. We now have the weekly chart, which is now at an acceptable energy level. The only thing that's missing is the main parent time frame here, which is the monthly chart. And I would say that by the time we get to the month of May, this is going to be green light, ready to trend again. Now, which way is it going to trend? Could go either way from here, but this is where we watch the price action. If, in other words, we see something happening like this, if we see the price raise above and beyond, say like the 271.5 level, then we're going to have a full reversal back up to the upside. We're going to have higher highs and higher lows. And that's going to favor the upside, although we do have that big trend line overhead, which is going to be difficult to contend with the first time around. On the other hand, you can also see how the expected move and the confluence of that and the 200-day moving average came into play this week, which is very important. And this is also going to be difficult considering the earnings after after market today. But if the price prints a lower high and rolls over, remember that is one of the most damaging signals in technical analysis, is the lower high. This is because any kind of move from here is going to breed complacency. It's going to breed complacency amongst the bulls. They're going to assume that everything is all back to normal again. You're going to see all the typical financial media outlets pulling out the party hats, the balloons, the kazoos, everything else like that, and just assuming that price is going to be heading higher. The lower high signal is the most damaging one that you'll ever see in markets, because the lower high from the complacency, anything that happens like that where distribution comes into that rally will completely destroy this market to the downside. And perhaps then we will get our bottom test again. Again, what I'd love to see is I'd love to see the price getting down to this area, building up some volatility again, because one of the problems that we have with today's market is just an absolute lack of volatility. And we're starting to see that yet again here. If we look over at the full S&Ps, we're starting to see the volatility contract. We're starting to see the implied volatility contracting once again. And so really since early April, we've seen realized volatility being higher than implied. And so this to me is worrisome, because we're starting to see a mid-teenager implied volatility once again, which I think is making the assumption that probably all is well, that we're probably going to be rallying higher from here. At least that's what the option market thinks. Perhaps another reason for the rally today was the 10-year note actually faded back down from 3% again. So yesterday we popped above 3% and now we're back down below it, although we're going to see some consolidation in this area. And it's going to have to happen quickly, because we do have a Fed meeting next week, mid next week, and we'll know a better sense about rates. Now, certainly they're not going to raise rates next week, but it's always the language that's within the policy release that people are able to parse that within milliseconds and then determine likely within a certain percentage as to what's going to happen next. So let's go back to Amazon one more time, and I think we have our answer here. It looks like we're holding steady at just over 1,600 above that expected move level. And I think we see the answer for what's happened with Amazon. Estimated earnings, $1.35. Actual was $3.27. That's not exactly crushing it. That's beyond that point. So Amazon is figuring out how to play the earnings game now. All right, folks, that is it for today's report. Thanks for listening. We'll see you tomorrow.